Today, I want to share with you 3 SPAC stocks that you should consider in your portfolio because going to 2021, the SPAC stocks are still really good value, still a good point to invest because they could go multiple growth for 2x to 5x in the next 18 to 36 months at least. So hear me out, stick with me on this video and I will share with you my findings. So the 3 SPAC stocks I'll be speaking about is, the first one is Bill Foley's merger with paysafe. The current ticker is BFT, and then followed by Gore's Holdings merger with United Wholesale Mortgage. And finally, PSTH, which is Bill Ackman's Pershing Square Tontine Holding, still no partner, but still in the lookout for. What is a SPAC stock? SPAC stock is basically a merger between 2 companies, a blank check company, which is the company that's already IPO, public holding, merging with a company that's with great technology, great patent, great products that's out in the market, seeking to go public, seeking public money, public shares, and hopefully grow and scale at a bigger rate rather than walking down the typical IPO route. So the very first company that I want to share with you, it's a company by Bill Foley's merger with paysafe. Paysafe is basically a fintech company, financial technological company. So to close them up, they're similar to the PayPals and also the Square. Current capital of 2.69 billion, value at 14.68 a share as of pre-Christmas December, and they potentially might go up to $9 billion after the merger. Cash online, direct debit, but the biggest one that everybody is hanging on is this digital wallet. And also the word digital wallet also favors investors because potentially they could go into cryptocurrency investment, cryptocurrency trading, cryptocurrency buying share to hold in a digital wallet. So as it stands, paysafe is going down a different route from everyone else because the online retail market, it's quite tough to break through. Okay, for payments and all that sorts, it's very hard to break through because obviously you got the Square, you got the Chase, you got the PayPal that's already existent. So how are you going to break into the market? So paysafe has broken into the gaming market as of just now, the online gambling. However, there's risk involved. Okay, the risk involved is scaling resistance because you've got key players in the market competition, so it's trying to break through that mold is going to be difficult. Okay, and the next thing is they need a better CEO. So they need somebody more appealing. They need somebody who will stand out like a sore thumb to drive this to beat other competition. And in terms of turnaround time, I think we need to give a good distance of 36 to 48 months. Okay, 36 to 48 months before we actually see paysafe as a household name. In terms of valuation for paysafe, it's sitting about $14 a share just now. So there'll be loads of up and down, there'll be loads of swinging depending on news that you're going to hear about what new customers, what new clients they'll be handling, or what new contracts they'll be winning. That will shoot the share up between the levels 17, 20, 22 and 25. But then also any bad news or any stagnancy or any new other paysafe equivalent coming up, this could push potentially the share down to 12 and then back down to $10 a share again. So be careful, really volatile, but you need to understand the risk. So the next one, I want to speak about Gore's Holding with United Wholesale Mortgage. Currently the price about $11 a share. Okay, market capital of only 600 million, and potentially if they merge and complete and a couple of years expansion, they could be potentially worth $16 billion. That's about 26x. But even if you do not believe the figure, if you slash it by 4 to $4 billion, that's still a potential of 5-6x. They're the biggest non-banking mortgage. They're the biggest private mortgage lender, wholesale mortgage lender in America. We are in a low interest rate climate. Okay, low interest rate climate is going to generate, it's going to push, it's going to entice people to buy new homes. It's going to entice people with money to set money into properties. It's got a really good platform, good AI, and also a good base to basically trying to make it faster, easier, and cheaper lender to up against competition like Wells Fargo, Chase, Rocket companies. So this is up in a really good market at a really good time as well. About all the good stuff, but what would be the impact? Okay, anything that deals with housing has got a huge impact on news, such as, firstly, they are a one-trick pony. So it's all about mortgage. Anything mortgage, they will go down. So if you've got anything about deceleration of housing loans that's being dished out or deceleration of people buying homes, this company will fall. Okay, anything about stimulus check that not being handled, no people have got no money to pay the mortgage, this will fall. Anything about unemployment increasing, people can get jobs, people can get loans, people can buy houses, put a roof on their head, this will go down. But think about it, $11 a share, potentially it could, the next level floor up will be 13, 15, 17, and the milestone $20 a share. Okay, this is what people are hoping for. There's a potential 2x in the short term of between 6 to 9 months. If things go well, the merger goes well, and then the market starts picking up, you could potentially a 2x, and then after that you're going to be looking at $25, $30, $35. So this is the way that SPAC stocks are handling itself just now, and this is the potential way of it to grow. But don't expect to jump really quick. You'll give up time. So if you've got spare cash, 10% that you don't know where to invest, you're looking for risk, and GHIV should be the one in your portfolio. But then do your own research and see if you understand the mortgage market before you invest in companies like this. And finally, the third one, PSTH, Pershing Square Thornton Holdings. Okay, very high profile blank check that's running around looking for a mate. But guess what? Bill Ackman, Billy no mates just now. They can't get anyone. So there were loads of rumors who is going to join. So if you do pay for the share, I think the share is about $20 to $24 just now. You're paying for a blank check. You're paying for companies got no revenue. You're paying for company, depends on what Bill Ackman's doing or any rumors coming on the street, then that share price go up enough. So you're overpaying about $5 billion capital for nothing. And this could go on for the next 6 months, and it could go on for the next 2 months. So be careful if you're investing in PSTH. If I personally, I wouldn't invest PSTH, but I'll keep a close eye on it, because any news, any good news will send this up to Mars. Previously, they had rumors about trying to merge with Airbnb, trying to get Airbnb IPO through the back door through SPAC. Airbnb said, nope, $68 a share, too cheap, we'll go somewhere else. Also, the next thing is they want to go Stripe. Stripe payment system. They like the fintech, they like their disruptive technology, and Stripe. After that, the news died away, and then no news. That's why it's pushed up $25. If any of these companies, which I've done my research, Coinbase. So if Bill Ackman decides to go, oh wait, fintech is dying, let's go cryptocurrency. Coinbase might be the one. Coinbase is currently only valued about $791 million. And also Grab at $3 billion. Basically, Grab is in Southeast Asia going up against SEA Limited, C Limited. So Grab is basically, they started off as a ride-hailing company like the likes of Uber, and now they've got delivery type company. They've got their own payment system. So Grab might be the next SEA. The next one, the big mega behemoth, Instacart at $20.6 billion. Less likely, but do not count them off, because Bill Ackman could swing his wand and make some magic happen. And the next one is Robinhood, $12 billion. Do you think PSTH wants to joint ventures with Robinhood? And the other one potentially likely is TransferWise, $172 million. Potentially they might join PSTH for that amount, or they might even make it grow bigger, but depending how they want to scale the company. So the other threat to PSTH for you paying $24, $25 per share just now, which is high risk, I think, is because SoftBank also coming out with their own version of SPAC companies. They might be spinning up 4 or 5 different SPACs. And remember, SoftBank has got a really good track record despite the failing of WeWork, but they've got the likes of Airbnb, they like Uber, quite low. They're unicorn hunters. So if anybody as big as Instacart or Stripe or Grab, they will go with SoftBank, not PSTH. So we need to think about, if they take too long to try to find a partner, they might lose the opportunity to find the right partner. So there's a lot of competition coming up for PSTH. So this is me for my 3 potential 2021 blockbuster SPAC stocks. But for me, I've bought 2 out of 3. For BFT, I've already loaded on BFT. I'm already started initial position of 300 shares after hours market. And the GHIV, I've gone in 400 shares because I think the mortgage should be one that's volatile, but it's sitting at the baseline at the bottom. The lowest could go is 10 and 9. So how low can they go? But it's most important is how high they can go, because I'm putting only maximum 10% of my holdings, and I've still got funds so I can rebuy back in at least 2 times. But then again, these are the stocks. If I do achieve a double or triple multiple in less than 12 months, I will let them go. This is not something that will make me a millionaire, but this is something that will multiply my growth in a very short period of time.
Alright, before I say goodbye, please do like and subscribe on my YouTube channel, follow me on Facebook, and if you want, support me on Patreon as well, so I can produce content like this every single day for you guys, to give you guys value. So please do share, share this video to help us grow our YouTube channel, yeah? Alright guys, 3, 2, 1, bye bye!